Broadcasting from the commodity capital of the world, Zurich, Switzerland, this is Insider's Guide to Energy.
Insider's Guide to Energy, ETRM mini-series, brought to you by Fidectis, where post-trading matters, and Falls and independent management and consulting boutique, creating impacts for clients and markets.
Welcome to Insider's Guide to Energy, ETRM mini-series. Today, we are fortunate to have with us Jon Fox from Topaz. Jon, welcome to the mini-series.
Hi there, Chris. Thanks for having me.
Well, I think it makes sense to start. Who's Topaz?
Well, Topaz is a relatively modern company. We're based in the cross-commodities trading and risk space, mainly looking after people who are trying to get sort of real-time cross-commodity risk and perhaps have an interest, in kind of physical assets or other structured derivatives pricing as part of a, sort of composite view of their risk exposure.
Well, as I've done throughout this whole mini-series, I'd like to start by asking our guests what they see happening in the ETRM or the risk management space and what's driving them. So I started this series with Martin because we saw a lot of startups, we saw a lot of activity and a lot of change taking place. So from your vantage point, what's happening today in the risk management space?
Yeah, I think there is a lot of a change going on at the moment. I think that certainly risk management is quite a hot topic at the moment, particularly. I think obviously markets have been very volatile recently. I think there's been a lot of focus on it. Certainly, there's still a lot of people out there who are, still using spreadsheets and, don't have the capabilities they need for their existing risk systems. And so I think it's been an area of focus for me recently.
And so area of focus, but focus on what? So risk management's been around for a long time. So what's keeping people up at night? What are you seeing the industry demand that didn't exist in the past?
Well, I think there's a lot more focus on kind of real-time capabilities. So, traditionally you've had a lot of end-of-day systems. People have been doing overnight or batch valuations, and that doesn't really give them a view on the market intraday, especially when they've got exposures which are dynamic and are changing with, underlying prices. And particularly that's been, relevant recently.
So, John, would you say that this demand of real-time pricing risk management has certainly or strongly increased since, let's say, this geopolitical development and the market prices going through the roof?
Yeah, I think it has. And I think, people are also starting to look at optionality for things which perhaps wasn't as exciting in times when goals were lower. And they've taken a close look at, obviously, even prior to recent political events, we've had a lot of activity in power and gas markets in Europe, certainly last year. I think that's been a bit of a wake-up call, and people are, looking at paying more attention to structures which perhaps weren't as interesting as they were previously, which now are a lot more risky than perhaps they were.
Okay, yeah, that sounds very reasonable. But I think the one of the main driving factors is the high volatility for increasing demand of pricing or real-time pricing risk management. So my question to you, and I think that's a very interesting one, is how will it develop in the future? Do you think that volatility will stay up high, maybe not as high as it was in the past weeks, but do you think we will reach, in general, a high level of volatility in the next months and years?
I think we are set for volatility to remain high for the foreseeable future. I think obviously there's a lot of talk around, rebalancing supplies of energy, perhaps away from, Russia, and, constant increases perhaps in demand for things like copper for electrification. I think there's going to be a bit of a change, in terms of, what's in demand and how much and where we're getting it from. And with that will become, the imbalances, and with that will come volatility.
Okay, that sounds very much reasonable from my point of view as well. But maybe let's go back one step, since we, I think, driving already in some more concrete areas, but very interesting areas. But nevertheless, maybe for our audience, it would be very helpful also for us to shape a bit better the product and the services that Topaz is providing, because as per my understanding, it's not a classical ETM system. You mentioned already risk management pricing, real time behind it. This is the focus, but maybe you can elaborate also a bit more on the level of the trading architecture. So how is who is using your risk management and pricing solutions usually, and to what systems is it usually connecting? So to get a bit of a high-level view on it.
Yeah, sure. So, I mean, we've tried to design the system to, look after essentially traders and risk managers in the front office. So what we've seen, quite often is that, CTRMs are put in to companies. They're usually led by the perhaps back office typically. They may provide a system of record. They'll, do sort of CRUD type activity quite well, keeping track of things, sort of life cycle and process related stuff. But typically what they're not so good at is sort of analytics, pricing, real-time behavior and things like that. So, often we find traders are still, using spreadsheets, still running their models independently. There's a lot of risk associated with this sort of off-system, work with models, because it means that there's not visibility perhaps elsewhere in the company. It means there's not necessarily consistency. The risk guys might not have, the same view as the traders are looking at, or might not even be aware of the risk. So I think, that's an area which a lot of people still have a problem with, especially for, any assets or underlyings which are, more complex than, say, very vanilla things like linear instruments. And so, that's an area we see as which we're trying to focus on. And so typically that would be perhaps, as an augmentation to an existing system, because we've kind of gone after that horizontal layer where it's cross commodities, but at the front, as opposed to sort of a deep stack all the way to the back.
Okay. And since you mentioned cross commodity, I mean, the commodities can be quite different and require different pricing and risk management models. So what kind of commodities are your, let's say, sweet spot, and which one can you cope in general with?
So I think, the main ones we can cope with really are oil and metals and gas and power. Those will be our areas of focus. We also have, functionality, but quite general around ags and some trade obviously as well, world scale, that kind of thing. So, but those are our core areas, I think. So, cargo-based optionality on oil and metals, and structured derivatives around them. And as you say, the markets are different. So, you've got different characteristics, like the LME market structure, for example, or for power and gas flow markets, shaping, things like that. So yeah, what we've tried to do is, take into account those, characteristics of different markets in such a way which, the idiosyncrasies they have, but then provide sort of common, reporting functionality on top of those.
Okay.
So you're talking about where you are today. Just curious, stepping back even a little bit to the beginning here. So you're the founder of this company. What's different now from what caused you to start the company? What trends? Because you're not brand new. You're not this year. You've been out for a little while. So what's changed from your initial mission statement to today?
So I think, when we started the company, what we were trying to do was to, build out a solution in that front office space. I think there's not a lot out there. There's people sort of going after, there's perhaps point solutions for specific markets, for, specific underlyings and different office instruments. But for a cross-commodity system, which is in real time at the front, front office, there wasn't really anything out there we could see. And so that was really, why we went into that market. There's a lot of bigger systems that have been around for longer with older technology, which really didn't offer the kind of slick, real-time, flexible interface that we've tried to offer. And so that was kind of our core mission initially.
You were going to ask a question.
Yeah. So real-time, I think, goes very well in hand with a development that is very predominant in the market now, renewables. I think that increases the speed drastically that an operational or that an organization needs to perform in trading. And I'm curious to hear what impact renewables and the speed, let's call it that way, that comes with them, has on your solutions, and how you maybe plan to change certain functionality.
Yeah, well, right now in terms of throughput, we have pretty good throughput. We're an event-based system. We're distributed, so we're very. I think in terms of handling large workloads, lots of trading ingress, distributed computing. I think we do a good job of that. We don't have a lot of specific renewables functionality right now in terms of structures in that market. Although we do have general power structures, but certainly we have plans in that regard. And I think in terms of things like PPAs with sort of optionality embedded in them and requiring sort of simulation like that, I think we're kind of well placed to cover that kind of stuff. We've done a lot of work on quite generalized simulation engines, with Monte Carlo, Longstaff, Schwartz, that kind of thing, to distribute across the cluster. So a lot of the work we've done is providing that sort of platform to to handle that kind of computation. And then as specific use cases come along, we can leverage the platform we built to handle those use cases.
Okay, that's a very interesting, let's say, buzzword platform. I think that's something that the industry is also driving more and more to move away from monolithic systems to more microservice-based platforms. Focus on the platform aspect. So, John, you mentioned platform is something that comes along with your product. For me, platform comes with, on the one hand, the capability that a larger end user group can work on it, but also being able to write own business functionality if needed and deploy it on the solution, and be more flexible, scalable as typical monolithic solutions. So maybe you can explain a bit in that context what your platform solution provides.
Yeah, so in terms of platform solution at the moment, it's an internal platform for us, as in we can build our own components very quickly for custom on top of them. But a project we're working on at the moment, and we hope to deliver in the next couple of months, is a solution whereby we can extend the system with Python models. So we're trying to find the balance between as you mentioned, you have closed systems, and people want to extend them, and they want to have flexibility around that. But on the flip side, you don't necessarily want to make it completely open, so then you have issues managing your code base. You need a large team of developers. Things get out of control very quickly potentially. So what we're trying to find is that sweet spot whereby you have control to develop extension points and perhaps models in this case for us, where you don't where it's not a total free for all, where it's sort of well defined and there's clear interfaces you implement and things like that. And so in that case, you'd be able to create Python models, you'll be able to maintain them yourself, you'll be able to have them in our system now. Our system is event-based, it's all versioned, so those models will be versioned as well, because if you go back in time, you kind of want to use the old version of the code, for example. And the idea is that that would leverage our distributed computing platform internally, whereby you'd be able to spread those models out, compute them across the cluster, and then you'd be able to utilize that as part of any other risk reporting evaluation you were doing. So we've already got a prototype for that work internally with some of our own Python models. The next step, of course, is to expose that to the end users so they can maintain their own, and they can kind of prototype and build their own models and then distribute those and package them as part of our system for utilization reporting.
Okay, so to summarize, as understood, or if understood correctly, the client as of now cannot yet build own code and deploy it, but he instead has to hand over Python models or code to your team, because you're fully doing the operations of the platform, which means also the CI/CDs of the continuous integration of new code.
Well, no, right now we're prototyping the Python part. Our existing models are all written in Scala, which is the language we use for our platform. What we're doing is we're going to expose that for external developers to be able to put their own models in and provide their own source code, which they can manage themselves without any interaction with us, to deploy into the cluster for computation.
Okay, understood. Thanks. Okay, then moving maybe one step back to the topic that we talked about before, renewables. So I think beside PPAs, there's also the CO2 management or management of certificates. So how does that currently drive maybe the development of your solution, and how do you see it from a business perspective? Is it something in the future that will be very important still?
Yeah, I think it will. I mean, for us, we support, emissions markets in the sense that they form part of structures. For example, let's say you've got a clean spark spread or something like that. Clearly, you have to model emissions prices, and that's a component of it. Right now, we're not involved in the sort of accounting part and the more back office parts of it. So that's again, as I mentioned earlier on the call, we're sort of front office and risk. So certainly that kind of risk arises as part of structures we see, and that's something we model.
Okay, understand. And since you mentioned now clean spark spread, I think it was so. And also you mentioned before some complex structures. So what kind of complexity is available in terms of tradable products, and what if a user wants to have a new structure available in terms of pricing and risk management capabilities? Do you provide those new types of products? Or how does the development cycle work?
Yeah, well, it's but either currently it will be us, yes, but in the future, as I mentioned, with the Python API, and people will be able to do their own. But it's very common that we'll do an engagement with the customer, and then we'll, as part of that, we'll commit to producing, some sort of pricing structure on top of, our existing platform. So, for example, actually, we're just at the moment about to start a project doing VPPs. Doing a customer has some gas peakers, and they're looking at managing the kind of vega exposure of those things over, say, a 6-month window. So, in that case, we're utilizing obviously all the components we already have in our system, and we're building kind of a peaker model on top of that to support their portfolio.
Okay, understand. And maybe a bit of a shift in topic, but what I see sometimes, especially with bigger players in the market, is that they might have more than one ETM solution for different markets, where they do their P&L measurement potentially inside the ETM system. But we all know that the P&L measurement or doing the end of day valuation is the basis for risk management as well, deriving Greeks and other risk relevant measures. So what I see as a challenge is that you have several ETMs with several ways of measuring P&L, and then it gets tricky to do a central risk management in terms of finding what is the risk factors across books, across commodities, across markets. Is that something you come across as well sometimes? And if yes, what do you advise clients if they have such a situation?
Well, yeah, that's an interesting question, actually. So, we've come across a scenario where you're trying to integrate with, say, an existing CTRM, obviously, as part of, our deployment pattern typically. And one of the things you always seek to do is try and, reconcile with it and make sure you're confident that you sort of captured the essence of, what trading information is in there and you can evaluate it in a consistent way. Now, a lot of systems, there's sort of a single way to value things perhaps, or, system level configurability. What we've tried to do is expose lots of sort of calculation preferences, whether that's to do with things like curve interpolation, what kind of how to deal with vol, what kind of models to use for options pricing, et cetera, et cetera. And we've wrapped those up in a thing we call a calculation profile. And often what people wind up doing is sort of using one of those to mirror the behavior of, let's say, an existing target system. So let's say they've got a handful of internal systems, they might have a calculation profile in our system which mirrors the calculation options of that particular system, which allows kind of reconciliation. So thereby you can sort of ensure that the sort of calculation choices and how it's handled is in line with it. That's obviously assuming we've integrated that system to extract information from it. And thereby you can consolidate it, you can sort of see, views of the trade you've got in our central system, but, with various different calculation profiles. And indeed, you can pick your own common profile. For example, if you're a risk person, you probably want to have a single profile where all trades, regardless of, source system, are treated, in the same way.
Okay, but that means you really need to think well about how to integrate your solution into an existing system landscape of a client, because you might need data from different sources and systems.
Yes, I mean, certainly that's, you need to integrate to get data from other systems. But typically that's going to be a much simpler process than, for example, replacing an entire system. So, it's much easier for us to extract information out of existing systems, which already are seen as, a source of truth. I mean, obviously you should have at least one source of truth within the company somewhere with, whether that's for trading information or market data or whatever. So, we would typically either integrate with that. In some cases, it might be that source of truth. For example, if you're hooked up to Exchange, maybe. But, often we'd be sitting on top of the source of truth, extracting information from that and providing, advanced analytics and reporting services on top of that.
Okay. And along this integration process, do you usually support the client in a way that you might take over the full integration journey? So building interfaces and before that already defining a target architectural design?
Yeah, absolutely. So, we work with customers to, provide those integration services. I mean, we have a sort of internal tool we call Topaz Connect, which is kind of like an open source, integration engine, which, admits adapters where you can sort of link into target systems, transform stuff into a sort of common domain model, and then, push that into our system, probably with gRPC or something. And, that's kind of something we supply as part of that. But we certainly engage with the customers on what that integration might look like. Absolutely.
Okay, it sounds like a modern API-based architecture for making sure that the integration can work as seamless as possible.
Yeah, absolutely.
So I guess that would bring up ecosystem kind of thoughts. So you've got a connector, you can play nicely with, you already talked about bringing exchange data in, and you've talked about other ETRMs. What's in your ecosystem today, or what's your approach to ecosystem and partners?
Well, currently, like I say, we've generally gone into existing trading companies to work on top of their, whatever CTRMs or internal systems they already have. Right now, we don't really, have much in the way of sort of an ecosystem of partners. We're not trying to sell ourselves like a full-blown solution from front to back. So we're typically looking at use cases where either we can supply everything that's needed for, say, a derivatives organization, which is, trading exchange traded derivatives, or somebody who has an existing kind of in-house implementation but doesn't want to break the bank and have to tear out everything and start with a whole brand new approach. So that's kind of where we sort of see ourselves. But I think over time, we would look to sort of partner with additional people in the industry to try and perhaps build up a sort of pre-configured portfolio, if you like, and offer that to the market. Actually, there's a couple of people we're talking to right now about that kind of partnership. But I think that's probably where it'll go in the longer term. But at the moment, we're sort of looking at some of the perhaps well-known larger legacy vendors, let's say, sitting on top of them, perhaps to extract information to provide our reporting layer with the customer.
Got it.
And do you provide some standard out-of-the-box interfaces to, as you call them, the bigger legacy vendors?
We do have sort of internal kind of adapters which we've developed, and obviously I think some of these systems are very big, so over time, of course, different people have different requirements. So I'm not going to say that we have sort of 100% support for the entire scope of some of these systems, but certainly it's a great starting place, of course. And of course, and also a lot of individual companies will customize systems or otherwise extend them in ways which aren't necessarily consistent. So there's probably going to be a little bit of work to be done depending on what the implementation looks like. But certainly, let's say a good chunk of the work is already done for some of these systems. Yeah.
Okay, understood. Maybe shifting a bit the topic then to let's call it cloudification. That is also a process very ongoing and demanded, so to move more and more applications into cloud-based technology. So, what is your approach towards cloud? Are you providing a cloud-native solution, or are you coming from a more legacy environment and now moving your solution into the cloud?
No, on the contrary, very cloud native. Of course, it's a recent modern platform. So obviously, we're lucky in the modern world to have things like Docker and Kubernetes kicking around, and for our system, we've developed it to be distributed in cluster based and containerized. We're pretty cloud agnostic in the sense that we really try and work in a reasonably vanilla Kubes cluster. So our implementation approach, in terms of deployment, is really up to the customer. We're not sort of going to force your hand to go full Sass. You can, of course, and we can manage it for you. But some customers insist on it being on premises. They don't like the data to leave the building. So in that case, we can also support internal clusters, perhaps running on VMware or something like that. So we're pretty agnostic. In fact, quite a common pattern actually is that we do deploy it on a cloud deployment, but it's the customer's cloud. So it's it's their account, their subscription, but we just manage and manage it for them. So that means that they don't get the friction of having to deal with kind of internal teams for maintenance or support or anything like that. But it's their systems, their hardware, their data.
So you say a lot that in your vernacular, you're saying we deploy and we work with our customers. So are customers using you mostly for services, professional services to do this, or are some of them actually able to take your solution and just go and deploy on their own based on the toolbox that you give them? I mean, you did talk about the connector being pretty easy as well. So in all fairness, you gave kind of both samples, but what's your typical model?
So far, we've typically done it. We provided those services for our customers. I think that actually the new customers we're signing up soon are interested in doing it all themselves, so we probably support them in that process as required. But I think it should be straightforward enough with our APIs for them to do it. I think it very much depends on what they're trying to achieve and sort of what the breadth of it is. If there's lots of new areas, perhaps some new development on our part, then that might require a deeper engagement. But otherwise, if it's reasonably vanilla, then it should be straightforward to with our existing APIs.
And then with your Python ecosystem, I don't know if it's like an SDK or if it's a kit that you're providing. You talked about, writing apps in Python and then being able to use them. So I know it's a work in progress. It's ship leaving the dock type of thing. How does that work then? Is there a sandbox that they go build these in and play with, or what's the journey from writing this to control and to make sure it works well in your ecosystem? What are all the steps that go to deploying a Python app on your system?
Yeah, well, obviously, as you say, this is still work in progress, but currently what our vision looks like is the following. So obviously, one of the benefits we want people to get is to have everything work seamlessly within our existing computation platform. So, if they write their Python code, they obviously want it to be distributed in the cluster and to be, parallelized along with everything else. So I think what we're looking at is a model whereby we have sort of, a Python library locally. So, something which they could deploy on their desktops. They'd be able to develop against that. And there'd be a method whereby they could call into the cluster, for example, to extract things like market data and other information they would need for trade valuation. And then they'd be able to deploy that. And, obviously we already have a very good system for version controlling code, and it's called Git. So we'd use that. And have Git tags, for example, which they could then reflect in the calculation profile I referred to earlier. You could sort of say, well, I want to use, my custom model XYZ. And I want to use, tag, the tag name for this. And the idea would be that that's something could be deployed in the cluster. That's something that, cluster nodes could then compute, and that our Scala JVMs could then invoke and then execute on the cluster nodes and distribute in that way. So that would give them the kind of, high quality sort of, local Python experience, perhaps with, PyCharm or something like that. And then they can deploy that in a way they'd be familiar with Git, for example, and then they can refer to that in the cluster and test it.
Okay, sounds pretty much like modern industry standard as well. But what I'm wondering in that context, and I'm sure you probably have thought about that, is how you're planning to make sure that deployment of customers does not break existing code.
Yes, well, that's, obviously that requires testing. One of the things obviously we have to have is ensure that APIs are conformed to, and they have to be versioned. So I think that, if there's breaking changes to APIs, of course, what we'll have to do is provide compatibility of versioning of those APIs as we move through time. So initially, I think, we'll have our initial set of APIs. Clearly, we need to have structures which support, what does the instrument look like, which I'm trying to value. And also we need to be able to call back in the system to find out things, market-related information, which again is versioned. So, we can store that early. And over time, as that evolves, we'll need to, provide compatibility for those versions. And also, if there are breaking changes, which we will obviously have to tell our customers in advance, people might then have to go back and fix up older models for them to work with a newer version.
Okay. So when you speak of versioning as well, back to earlier point in the conversation, it sounded like that you play very nicely in the sandbox with large legacy systems, and you bring additional service or value, and you get data from those. How hard is it to stay in lockstep with those systems, right? Because I know the upgrade process is fairly can be fairly a long process for some of the larger legacy systems. And how tied are you to that? I mean, obviously you control your own APIs for the Python we just described, but maybe a competitor who you're augmenting their system may not be as friendly, and you may not have as much visibility into their evolving roadmap. How dependent are you in that?
Yeah, well, I think obviously, if we have a given customer of ours, which also happens to be a customer of another CTRM vendor, it's up to them. Obviously, typically, if it's more legacy one where it's deployed on site, perhaps, and they have a long upgrade process, they would have to plan that out. And as part of that, we would have an adapter which connects into that system to extract the information we need, and that would have to be taken into consideration during the planning process. So far, that has been, we haven't had any sort of serious breaking changes, but, obviously that could easily be the case, and it would have to be taken into account, as part of the planning process for any sort of system upgrade.
Okay. In all that context, it's a very, I think, related question, but a bit different. Once clients start to deploy their own code, or even if you do it for them, the question usually arises about the IP of the code. Or let's put it in a very concrete example. A client has a very specific pricing model that is outperforming the market for a certain product, and he's deploying that pricing model, or you do that for the client on the platform. So how does it work then in terms of IP? Are clients usually then requesting that the IP is with them so that nobody else can reuse that functionality, and you're also not allowed to resell it via license? Or is it sometimes even shared functionality, or both?
Well, so far for the models that we've implemented, they've been sort of mainly driven by us in terms of design of the model, I would say. So, right now there is no IP carve-outs, and I think that's really something we're particularly keen on doing. Once you start carving up the IP of your code base, I think that causes code management issues which are hard to resolve.
Yes.
I mean, this is one of the reasons, of course, that we're developing this Python-based sort of sandboxing infrastructure, is because if people really do want to own that IP and they really do want to keep that separate, then that's a nice way to do it. In terms of our code base, I think once you start sort of carving up bits to the code base, it becomes very hard to manage the code on an ongoing basis. So that's not something we've done so far, and nor do we intend to do it.
Okay, understood. Okay, talking a bit about maybe automation, which is also an area that drives the market, I think, more than ever since a few weeks and months. You mentioned already real time. So I understood that you're coming already from an area where real time or near real time was always very important for your solution. But since let's say the strong development in past months, have you planned to improve your solution in terms of automation, like automating workflows, or becoming more automated in terms of data supply? So any area that gets impacted by the recent developments?
Well, and as I say, for our system, integration of the system and feeding data in typically is we do automate as part of any integration we might do. In terms of new stuff we're planning on doing, we actually have we've recently written some adapters for exchanges, and one thing we're looking at doing is writing some rules engines for those. So kind of automated allocation engines for putting them into certain places. Right now we have the adapters, but we just sort of pass them straight through as opposed to doing anything clever with the rules. So I think that's a little bit of area of automation. But generally, the automation in terms of feeding data in is something which resides in our integration layer. So that's extracting information from third-party systems and providing that reporting capability.
Okay, and in the context of building adapters to exchanges, it sounds a bit like to me, but maybe I'm wrong, that you are trying to automate and provide capabilities for order execution or order placement for clients. Is that correct?
I'm talking about the drop copy feed. I mean, order management is something which is also on our roadmap. Looking at that in terms of how can we see that as part of a composite portfolio. If I want to stress test, for example, so we have a lot of tools around stress testing, other sort of risk analysis, and you might want to see if you've got like a resting order book of limit orders, you might want to see how that behaves as as the market moves around as you stress test it, for example. So that's an area that is on our roadmap. And also that and feeding orders to execution venues as well. But no, I was really talking about sort of drop copy feeds, STP feeds, if you like, from existing exchanges where you can execute orders and you get fills in, and you want to get them flowing into your system, and you want to have them allocated according to the rules. So that's an area of automation we're going to improving.
So for the moment, more a focus on post-trade capabilities. So once it has been executed on an exchange, that the flow into the system is completely automized and having some data analytics on top, as understood.
Yeah, so the flow is automated. I think we're looking at sort of allocation rules of like, where you place things inside the system, so you can allocate different books or things like that. So I think, you're asking about, new areas of automation. I think that's one of them. I mean, they already get fed in as it is. And of course, you're going to get your real-time risk feed straight from the exchange, currently. And the idea would be to improve automation around that.
Okay. What I can see is a very strong demand in terms of, let's call it real-time application, is especially for gas and power trading, a real-time position management tool, so that any trader can see at any point in time his positions for different markets, and of course understand then short-term if he needs to hedge in terms of volume to meet balancing requirements, for example. Are you providing a real-time position management tool that is decoupled more or less from the risk management and P&L layer?
Well, I think that the whole it's all integrated, right? So the whole system is kind of real time risk, So in our system, we don't have lots of different reports, for different kind of concerns. What we try really hard to do is to build, one report to rule them all, if you like. And the idea there is to have many different risk metrics and the ability to sort of slice and dice across all the parameters in the system, and even combine concerns. For example, we have a fully versioned system, so we have a time machine effectively, so we can roll back and forwards time. So you might have some sort of reporting fields around that. You might have some stress testing, a P&L explain, some VAR, etc., etc. And the idea is you can combine all of these onto one big report. Now, obviously, that's constrained by computation, of course, but the idea is you could do it. You could build it. So all this stuff is real time in that context, subject to competing constraints, of course. But so there's nothing special about, in our system about, being delta or gamma or P&L or anything else, whether it's real time or not. It's all handled by the same unified reporting framework.
So you mentioned when we kicked off the call before we started recording that you just won some UX award. So how do you visualize all this, and what makes you win an award? What's different about your UX than what's in the market?
Well, I think we've sort of bucked the trend a little bit because we're actually not web-based, our UI currently. We went with Java FX. It's sort of the client bootstraps from the cluster and updates itself regularly. But it's a kind of it's just client logic. It's just for doing UI, drag and drop, things like that. But it provides quite a nice experience. If you've got large data sets, big grids, lots of stuff going on, and you want to be able to handle that, it works quite nicely. So we've made that sort of slick and modern and usable because we tried to make it as easy as possible to use. I mean, obviously risk management can be a complicated field in terms of all the various facets and calculation choices you can make, but we tried to simplify that and make it nice and easy to use in a sort of familiar interface and fast. So I think that's the kind of one of the reasons we got that award. I think is probably because the sort of slickness and ease of use of the UI that we created.
That's interesting. So it's counter the trend though to have done that the way you did it.
Yeah, I think we probably if required we probably would produce a web UI. Again, it's all API driven, so we can have numerous APIs if necessary, right? But UIs rather. But we went with that choice, because I think we thought we were going to build a more performance system for large data grids. I think actually web UIs have got better at that. There's WebAssembly and things like that. You can get pretty large views these days, but at the time it seemed like a good choice. And also the Java guys finally got their act together and produced the JavaFX framework, which is better than previous attempts. Let's put it that way.
Okay, maybe a bit of a shift again in topic, but I can imagine that performance might be also a big topic, an interesting one for your clients. So to make sure that, especially when you have computationally intense risk management and pricing models, that they don't need to wait hours for results. So scalability in terms of performance might be a key area for you to fit customer needs. So how do you tackle that area?
Yeah, I mean, you're absolutely right. That has been one of the key areas of of developing the platform is to how to ensure kind of a consistent, fast response and how to fully leverage a distributed computing environment to get maximum performance out of it. So what we've done is we've built a Scala JVM based system. We're using Akka, Akka clustering and Akka actors, things like that for concurrency management. We have a sort of event store driven backend. We're using Akka persistence. And, we distribute our workloads around a Kubernetes cluster. We have a couple of node types mainly, seed nodes and compute nodes. And you can fan these out across pretty big clusters and distribute workloads across them. End users talk to, the seed nodes. That gets fanned out across the cluster when, work is produced as part of, say, a report request, something like that. But the idea being that, you can have these very large workloads and you can, divide and conquer and split them up over the cluster and, get good performance out of them. And also it's JVM, so it's, it gets jittered, it's sort of native performance. And it generally works, works pretty well. And we can, parallelize it very effectively.
Okay, and you mentioned back then that often it's the case that the client is deploying the solution on the client's cloud. So I guess in terms of performance, it's also important to scale the performance of the cloud that comes with it. So Can you see that this is sometimes a bottleneck for clients once they have it on their own cloud environment and they're not fully managing the performance well there? So is that an issue?
Well, I think that's that becomes their choice. So I mean, they're running a cloud, they have a cluster, and it's up to them. Obviously, what computational resources they decide to use in that cluster. I think obviously they have their own data, they have their own sovereignty. And they can choose what the computational requirements they have to handle the workloads they're interested in. So, I mean, obviously, the great thing with the cloud cluster is, you can very easily kind of spin it up and spin it down and change the size, very rapidly without having to deploy, metal. So I think that's, a great benefit and is very straightforward, actually. I mean, increasing nodes in Kubes clusters on most of these platforms is trivial. So that's very easy to kind of scale up and down.
Yeah, okay, understand. In terms of automation, I mean, a topic that is linked to it, a very specific area of automation, algorithmic trading. I understood before that you are now looking into providing capabilities for pre-trade D-Live or status. So order placement is probably some area of capabilities to develop. But how do you see more from a business point of view algorithmic trading in the assets that your clients are active? I think it was mainly gas, power, oil, but probably others as well, metals. And how do you react towards that potential increase of algorithmic trading demands, which I would assume in some assets?
Yeah, I mean, I think there's definitely more demand out there for sort of trading around, assets algorithmically, particularly, for example, in power, short-term power, things like that. I think, from a company point, that's not really a space that we're planning on doing a lot of work in. I think there's a lot of sort of solutions out there which very specifically kind of focus on that particular area. So I don't think that's an area we'll be looking at soon. But in terms of handling that information from a reporting point of view, absolutely. So yeah, there will be increased amount of trades executed, increased fields that we have to deal with. And I think we're well placed to handle that. I think that our architecture is going to be able to handle that kind of workload reasonably easily. But certainly from an execution point of view, and that I was talking about earlier, from order management, I wasn't really referring to algorithmic execution there, mainly sort of handling traders who are sort of executing an order book. But certainly, if were filled by, if we did have visibility on algorithmic orders and indeed the fills that came out of them, I think we'd be able to handle those. Yeah.
Okay, so you would typically connect to a vendor or an in-house solution built by clients that manages algorithmic trading, so building strategies, backtesting them, and executing them. But you would more take, for example, over the part of reporting and data analytics potentially.
Yeah, I think that's right. We'd be more at sort of post-trade type analysis and reporting after the fact, and possibly in the future looking at sort of the order book if such thing existed.
Okay.
Anywhere else you want to go, Martin, on this conversation before we switch gears?
Not for the moment. I think we covered quite some.
I think we did. We've been all over the place here in the last little bit. So I think it makes sense for us to switch gears and go into our speed round and go ahead into the 10 questions. The way this section works is we have 10 questions. We've asked every vendor that's been on the ETRM mini series, and we just round robin between Martin and myself. I will go ahead and kick off with the first question, and just short answers are what we're looking for. 1 or 2 sentences, just what you think. My first question is, will the number of ETRM vendors or solutions shrink or expand in the future, in your opinion?
I think it will probably expand, and I think that's because markets are becoming more automated, and also technical platforms are becoming, making it easy to build systems in the first place.
Okay, then second question, how many deals per minute must a modern ETRM system today be capable to import?
Well, I guess that depends on what kind of market they're in and sort of speed of execution, but let's say somewhere around 10,000.
Okay.
All right. So what commodity types and energy types are you offering, and which ones are your greatest strengths?
Well, we're across commodity systems, so for derivatives and some physical, we have support for oil, metals, gas, power, LNG, ags, freight, things like that. I think our strengths are in oil, metals, and gas and power. That's where we've done most of our focus and have sort of additional features for derivatives which are common in that area and other sort of physical optionality.
Okay, great. The next question, do you offer a real-time position management module, and how many trades can it process? I think the underlying question is it event-driven?
Yes, we do. In fact, that's the core of our system. And yes, it is event-driven, absolutely. And how many trades can it handle? It's more about how many kind of unique positions can it handle. I mean, you could potentially have millions of trades and they get rolled up and netted. So it's about unique positions, but in theory, millions, depending on the structures.
Okay.
Right. So do you have an automated workflow for straight-through processing?
We have adapters for CME and ICE currently, and we have a very simple kind of Topaz Connect integration engine which people can build on. And we're looking to build a sort of more sophisticated rules-based engine to support kind of more complex allocations.
Okay. Then next one, can your solution price Asian power options?
We do have support for Asian options. We have a bunch of closed form solutions as well, and also some simulation models. And in the future, as we discussed, we'll be able to plug in your own implementations as well.
Okay.
All right. Are you offering a full integration and implementation service with your solution?
Yeah, we do offer full implementation integration services. We've also got a couple of partnerships with Reuters and CMAS, who can assist with integrations as well.
Okay. So what do you think as a vendor in that sense? Where do you see the biggest threats and challenges for your business model and your solutions?
Well, I think the biggest challenge always to sort of third-party vendors is kind of when you're competing with internal systems and the costs of integration associated with that. I think what we're looking at is trying to make that an easier process to make and sort of more simple than ripping out an entire internal system, and integrating with internal systems which pre-exist is something we're also quite good at.
Okay.
So what is your current licensing model like, and do you anticipate it changing in the future?
Currently, our licensing model is per user per month on a subscription basis, so no upfront costs. And in the future, I think any change we might make is to sort of change the modularization of how that breaks down in terms of subscription components.
Okay, then last question. Are you or your solution, is it offering API, so standard API technology? And what is the technology behind it?
Yes, very much so. In fact, we have a couple of technologies we use. Open API, so REST JSON, and also gRPC. So some tools are going to require, say, Open API if they want nice looking JSON on the wire, but generally we prefer to use gRPC where possible, and we do code gen and things like that.
Well, awesome. You've gotten through the speed round. Thank you for giving us all the answers, giving us a little bit different perspective. What I like to do at this point of the program is I like to give you just a short time to reach out to the audience and tell them why they might want to contact Topaz. Who's your ideal person to contact you, and why talk to you?
Well, I think if you're a company who's looking for real-time cross-commodity risk solution, you want to be able to slice and dice your risk, value more interesting derivatives and exotics, and perhaps you have an in-house system that you want to augment, then we could be the solution for you.
Well, thank you so much for coming on the ETRM mini-series. Thank you.
Thanks very much for having me.
Thank you,
And
Jon.
for our audience, this concludes this episode of the ETRM mini-series. Please listen to all the episodes, compare and contrast. Go to the website. You'll find information there. And we look forward to talking to you again on another episode. Goodbye.